Today we're looking at how to buy a house in Hurst, Texas. We're going to go into the financial assessment that you should take into consideration, the steps to get pre-qualified, how to search for the right home, write a winning offer. We're actually going to go through a contract itself and go line by line to give you some pointers on how to get offers accepted if you are in the process of purchasing. So as we get going, just a quick heads up, we have all of the notes and additional resources in DFWHomebuyerClass.com. So if you go there, you're going to get the outline that we have right now, along with a ton of other resources. So if you're looking to purchase a home in Hurst, this is your video. This is the only website that you're going to need to make a qualified purchase when it comes to purchasing in Hurst. So DFWHomebuyerClass.com. Let's begin. All right, so let's do this. Number one question that you need to ask yourself before you go into the home buying journey is, if it makes sense for me to buy, will I actually do it? I know it sounds a little bit unorthodox, but hear me out. Asking yourself this question is going to bring you clarity. Asking this question is going to help you avoid a ton of mistakes, a ton of energy loss, and just it's going to make your potential transaction a lot easier, a lot smoother. So this is going to give you a good conviction to move forward, and it's also going to give you a good opportunity to not move forward. Meaning, here's what this question essentially is asking: if it makes sense for you to buy, will you actually go through with this? So if all the conditions are correct, or are you going to actually go through with it, or are you just more on the idea of getting a home because you heard of, hey, it's the right time to buy from a friend, or you see some of your coworkers or friends purchasing and you're getting a little bit of, I'm not going to say envy, but you see that as an idea. Oh, hey, maybe it's time to buy, right? So we want this to be your actual decision. So this question is designed to root that out, right? So assuming that all the conditions are correct, you find that house, you find the right terms, all that fun stuff, are you going to go through with it? So if it does make sense for you to buy, will you actually go through with it? I know it sounds a little bit off, and it does throw off some of our clients that once we do our discovery calls, but it really, at the end of the day, helps them out so much more to get that clarity and gives them that green light to keep moving forward, or at right then and there, before a ton of time and energy is wasted by our clients, it lets them have that off ramp to where, hey, you know what? I just thought it would probably be a good idea because I heard a friend just bought their home. But at the end of the day, I like where I'm at. I don't want to move. This is not an idea that came from me, and this is not something I'm open to. So I'm just going to stop it altogether, right? So it's designed to give you that off ramp. So let's get this out of the way. Assuming that it is the right time to buy, assuming that you have gone through and really deliberated. Let me move here because I want you to see DFWHomebuyerClass.com. That's where you're going to find all the resources that we have today. Assuming that, hey, the answer is yes, it is. If it does make sense, I will go through and purchase. You need to look at the financial assessment. You need to look at three main costs that are going to affect your decision. So number one is understand that there's going to be ongoing costs. Number two, that there's transaction costs to the purchase of the home. And three, there are some moving costs. So let's unpack each one of those. When it comes to ongoing costs, you're looking at the mortgage payment. That one's pretty obvious, right? But something that is not as obvious, if you scratch the surface a little bit more, is the maintenance cost. At the end of the day, if you're renting right now, the water heater getting broken, that's not your problem. That's the landlord's problem. Well, when you're the homeowner, that is absolutely your problem. The repairs and all of the things that come with home ownership, that is your problem. That is something that you need to handle. So ongoing costs, that's something that we really need to be mindful of. Is that a commitment that you're willing to make? And also you need to start budgeting for what that's going to look like. And I'm going to show you exactly how to calculate your monthly mortgage payment to help you out in any market. But specifically right now, we're talking about Hurst, how to buy a house in Hurst. I'm going to go step by step so you don't miss a single item. Transaction costs. So assuming that the ongoing costs are not going to be are not going to be the stopping point, we need to look at the transaction costs. When you purchase a home, there's certainly financial items that you need to be mindful of. Well, number one is going to be the down payment. The minimum down payment in most of the loans that you're going to have access to it's going to be 3% down through a conventional means. If you get an FHA loan, that's going to be 3.5% down. Now, there are some zero down options like an USDA loan, but that depends on where the property is at. There's VA loans, but that depends on you being part of the military or having a spouse that's part of the military. So when it comes to the transaction cost, there's a down payment, but something that is often overlooked by everybody is the closing cost, the additional expenses that go into, oh, hey, what's up? Sorry, we got Eli in the house. What's up, Eli? Throw you up here. Here you go. What's up? What's up, Eli? Good seeing you. Kevin coming through again. What's up? Hope you're well. Thanks for hanging out. I appreciate y'all and the incredible support that y'all provide. Thank you, thank you, thank you. Let's keep going. The transaction cost. So the down payment is something that, of course, is something that is a lot of folks know that that's going to happen, but the additional costs, those closing costs, do kind of sneak up on us. So we have to pay for that title or the title cost, the lender fees. We're looking at inspections. We're looking at appraisals. We're looking at other expenses for the transaction to actually happen. And so we'll talk about some additional costs like surveys later on in this video. Transaction costs, super important. So if the minimum down payment is 3%, let's just say you put 3% down if you have a conventional loan, budget in 3 to 5 additional percentage points to the closing costs, and we'll look at those here shortly. Moving costs. So when it comes to the moving costs, this is something that we need to be mindful as well. There's cost to get out of the present home that you're in. There's cost to physically move your properties, your everything that belongs to you. So your belongings, there's the actual cost, the U-Haul, and if you plan to use that service, and then actually moving into the home. So when you're moving out, especially if you're renting, most likely you're going to need to bring whether your apartment or a home back to its original shape from where you got it, or you're going to lose your security deposit. That's a big expense. Now, the actual moving of your belongings, that can be thousands of dollars if you're using professional movers, or it could be several $100s if you're renting out your own stuff. Or your own, you're having some friends come over and you're paying them by the hour, paying them via pizza, and you're using somebody's truck, right? So everybody has that truck guy. Everybody has that truck guy that they're gonna always be friends with because they need that truck. Let's be mindful. Ours is Jake. So there you go. Shout out Jake. And then the furnishing of the home, or the not only you have the furnishing of the home, you have repairs of any home items that you need to be repaired, and also the upgrades that you're considering when you're purchasing a home. So there's some additional expenses that go along the way that we just often overlook. So financial assessment, really look at those three things: the ongoing cost, the transaction cost, and the moving cost, because those can add up extremely quickly, and you need to budget that in, especially if your budget is on the tight side. Now, step number 3, which reality, I should probably change this to be step number 4, but let's use them interchangeably right now because I don't want you to think that the whole thing here is just to get to a real estate agent as quickly as possible, because oftentimes there's many things that you should probably do on your own without a real estate agent getting involved until the time is right. But let's continue. The next step is going to be getting pre-qualified. So here's the deal. When you are looking for homes and want to put an offer on a home, you are most likely not going to be taken seriously unless you have a pre-qualification letter in hand. So let's just say you find that perfect home and want to buy and put an offer on that home. Well, you can't just say, hey, I'm offering you X amount of money. Do you want to sell? It doesn't really work that way. There's going to be a process, but also most importantly, you need to show your financial readiness to purchase. So if you have that money in the bank, awesome. A bank statement is going to go a long way to prove that you have enough money in the bank to purchase the home. Now, if you're going to get a loan, that you do need to get with a lender, whether it's through the bank or a broker, mortgage professional that can give you that pre-qualification sharing that, hey, Jaime is looking to buy this home. He's looking to offer $500,000, and we already checked his assets. We already checked his debt to income. We already checked his credit, and we deem him worthy of a loan of this amount. So that's what the pre-qualification says. So for you to get a pre-qualification letter, it's pretty simple. You just fill out an application from a mortgage professional, and very quickly they can turn around and give you a pre-qualification letter, letting you give you the opportunity to then put in an offer. But more than that, beyond a piece of paper, it gives you a realistic budget that you're working with. It gives you a number to shoot for. So here you don't have to guess of, hey, I wonder if I can afford that $400,000 home. You don't have to do that particular math on your own. That's something that the mortgage professional can do for you. So again, it sets a realistic budget. Now, here's the thing. If you get pre-approved for $500,000, doesn't mean that you need to spend all $500,000 on the purchase of your home. It means that you're eligible for, but it's certainly, I encourage you certainly not to use the entire budget because there's something called property taxes that we're going to talk about here soon. And in Texas, property taxes can really sneak up on you to where it makes your mortgage payment balloon if you're not careful. So we'll talk about, again, property taxes here very shortly, so we can make the appropriate moves. Now, here's a pro tip: get quotes from multiple lenders. It doesn't hurt to do some bit of shopping in the lending department, because it's going to give you different ideas of the fees that are involved. It's going to give you different options when it comes to the interest rate. It's not a bad idea, right? So the same way that you would do some quotes if you're going to get work done on your home, same thing here. Looking for opportunities to save some money is always highly advisable. Now step number 4, finding that right real estate agent. Now here again, I could realistically put this number 3, and in the future I might actually move this to step number 3, because the reason I want to do that is because we have a very strong lender network, meaning I know the lenders that can qualify you instantly. I know lenders that are going to save you a ton of money on fees. I know lenders are going to be very competitive on interest rates. I know lenders that are going to really help you and position you in such a way so as to win. Not all lenders are the same way that not all real estate agents are the same. So that's where probably in the next live stream, I will be flipping this to number 3. And it's just something I've been fighting for the last 10 live streams. But I think at this point I'm ready to make it, because again, having access to a preferred lender from an agent that does a significant amount of volume is going to help you save a ton of money, save you a lot of stress, and actually save the deal in many cases, because not all of the loans, if you get a pre-qualification letter, doesn't necessarily mean that you're going to be able to close that loan. And a lot of lenders, especially if they overlook something or not really as detailed as you would want them, they could put you in a situation to where it actually costs you money. But with that being said, finding that right real estate agent is, you need to find somebody that has 2 main traits. Number 1 is knows real estate, understands contracts, understands what the entire process is. That's incredibly important. And number 2 is understands the market, understands how the market is operating in your neck of the woods, that understands how to negotiate, that understands how to get you into a home, that is able to get you your offer accepted. So oftentimes you might not be working with the strongest budget, and you're competing against 3, 4, 5 other offers. You need a real estate agent that can write winning offers, knowing what is usually going to get the deal done without overspending. Because here's the secret: any real estate agent can write an offer and put anything on that piece of paper. And 1, doesn't mean that's going to get accepted, but 2, oftentimes it's going to mean that's going to cost you more money, because they don't have the confidence or skill set to negotiate down a home that you're putting an offer for. Oftentimes they'll say, well, they're asking for $500,000. Why don't you just offer them $500,000? Doesn't work that way. Unfortunately, it does work that way for a lot of agents that would just put whatever's on the list price and keep it moving. But no, and we'll talk about the strategies that we use here to get folks into contracts for less and for better terms. But with that being said, one thing that I do want to share and illustrate with the importance of finding that right real estate agent is that 50% of real estate agents last year sold 1 or no homes. So I'll say that again. Last year, 50% of real estate agents out there sold 1 or 0 homes. That's shocking, right? So don't work with a hobbyist real estate agent if you really are prioritizing getting the best deal, being protected with your earnest money, and really getting that dream home at the, you don't necessarily want to be somebody's experiment, if that makes sense. All right, so also understanding that there are buyer agent, there's new rules on the way that buyer agent commissions are disclosed. I'm not going to say that there's new rules on the changes on the commission itself, because in reality the commissions are going to be the same, but it's just the disclosures that need to be made. So whenever you're working with a real estate agent on the buyer side, it was supposed to be the case where you would be getting a buyer representation agreement, making it clear what the responsibilities of the agents are, what the responsibilities of the buyer's agent is, and also what the compensation is for the services. So in the past, it wasn't strongly enforced, but now, as of 2024, it is strongly enforced. You do and will be signing what's called a buyer rep agreement, where the buyer's real estate agent, in this case, your real estate agent, as you're buying a home in Hurst, is going to share with you a buyer representation agreement, making it very clear how much the services cost and making it very clear of what the buyer's agent responsibilities are. So don't be surprised when that comes into play. And we can talk about that more in the near future. If you have any questions on that, please feel free to drop it down below. But again, super important that you're finding the right real estate agent that is going to put you first, and it's not going to put you in a situation to where you're potentially going to lose money. Step number 5, this is where a lot of buyers actually start, and that is searching for the home. So oftentimes whenever we get that call from somebody that's looking to move into the area, or somebody that's looking to sell their home and buy another home, oftentimes this is where a lot of folks kind of already meet us. So the people that are looking to move into Hurst right now, they are calling and have already seen some homes. I've already seen homes on Realtor.com, on Redfin, on Zillow.com. So this is where the home search, in fact, it's actually the fun part. This is where we meet a lot of our clients in this step. And unfortunately, they haven't really done step 1, 2, 3, or 4. So we kind of have to get back up. We have to slow down in order to speed up when we're doing discovery calls with our clients. That's okay. That's part of the job. But just know that there's some steps that need to occur before step number 5 comes into play. So to make it a little bit easier on how to actually find that perfect home, we're going to go through and I'm going to show you how to look for homes, most importantly, but giving you a little bit of a heads up is make a must-have list. So I'll slow down here for a quick second because I really need to drive this point home. When you're looking for a home, have a must-have list, because what happens when you're searching for homes, you're going to go to a home over here. This really stands out and you're really excited about that. You go to another home and another part of the home really speaks to you. And all of a sudden you're just pulled in so many different ways to where at the end of the day, you just don't even know what you want. Either you want everything or you want nothing. It just gets really confusing for you. So before the emotions come into play, before the confusion comes into play, before the overwhelm comes into play, have a must-have list and no more than 5 things on that list. So what does that mean? That means let's just say you're not going to compromise on the school district. Well, there's only a certain amount of homes that are part of a school district. So that in of itself shuts out a ton of other noise, right? So if that's on your must-have list, then you put that on the filter that either you that is set up for you through the MLS, or that you set up yourself through Zillow, and you stick to that, right? So that could be within that. In fact, that's one of the top must-have items on the list. If you do not want a pool, well, that's very easy for you to knock off. Hey, I don't want a pool. That's something that is, again, can be on your must-have list. It's very easy to take those out. If you don't want a 2-story home, same thing here. You can nix those out. Having a must-have list is going to save you so much time. It's going to help you avoid the buyer's remorse. You don't want to get into a home after months and months of searching, months and months of getting into a home, and only to find out, hey, you know what? I actually don't really like this home. We saw hundreds of homes. It just seems this one, we just happened to get into this home because it happened to get accepted. Our offer happened to get accepted. You don't want that to be you, right? So having that must-have list is going to bring so much clarity ahead of time before the emotions take over. Now, here's the thing. You're not going to be able to find that perfect home. That perfect home doesn't exist. So we add another layer to it. So the other layer is that wants list. So there's certain things that you wish were part of that home. You wish that were a part of the area that you're looking to buy in. But at the end of the day, it's a wants list. It's not a needs list. It's not a must-have list. So here you can be a little bit more flexible, right? So with the must-have list, there's no flexibility. It just has to happen. It has to happen at a certain price, in a certain location, certain criteria with the home. No more than 5 items. In the wants list, you can get a little bit more flexibility there. But having this list ahead of time is going to really prepare you for home ownership. So once you have those identified, then you're going to set up your safe searches. Now, if you're working with the real estate agent, awesome. They're going to set you up from an MLS perspective. They're going to set you up on the safe search. If you're not working with the real estate agent, then I encourage you to reach out to us. Our contact information is down below to help you get into that dream home. Now, you're going to set up your safe searches so you get the homes that have the criteria that you're looking for. And as you get these homes, as you start getting these homes into your inbox, I encourage you, very, very, very important, to vet these listings out before you schedule an appointment to go see them. The pictures say so much. There's a ton of pictures. There's a ton of information in the description from the emails that you receive with these listings. I encourage you, with the help of your real estate agent, to vet out the listings that hit your inbox. Why is that the case? Well, before you spend an afternoon, an evening, or a morning going to see a home, taking the time out of your day, putting the kids in the car, and going over across town to see a home, only to find out, oh, dang, there's a pullback here. I didn't see that. Before doing that, pre-vetting your listings is so vital. A lot of real estate agents, a lot of buyers miss this, and unfortunately, a lot of real estate agents do not catch these items. So every time we get requests on, hey, can we go see this home? The automatic answer is, let's check out your must-have list. Let's check out your list. Does it meet what you were looking for initially? So you told us that you didn't want pools. Well, there's a pool back there. Is this really a home that you want to go and see? Right? So save yourself some time, save yourself some frustration. So on average, our buyers will look at 4 homes and then they end up finding that dream home. Is it because we're limiting the showings? No, it's because we have clarity ahead of time before we get into a contract, before we go and see a home, right? So we're very effective at the time that our clients dedicate to the home search, because you still have life, you still have commitments, you still have work and all that fun stuff. So we want to really be an asset to you in your purchase. And then one additional thing before we go into the home search and really look at Hurst at a molecular level is drive the neighborhood, look and see what it looks like. So go after work, go in the weekends, really see what the area that you're trying to go into, in this particular case, Hurst, see what Hurst is about in the nights and weekends, because more often than not, that's when you're going to experience it, right? So you're coming home from work. All right, what happens next? Well, if you don't want to cook, well, are there restaurants out there that you can take advantage of? Or are there restaurants that allow some delivery to get them into your home? So as an example, this is a really good example. My niece and nephew are staying with me for a few days. Well, for us, it's very, very convenient that two streets down, there is a ton of food, a ton of things to do, and all you have to do is just even walk there and get everything that we need, right? So is that the type of neighborhood that you're looking for? And is that the type of area that you've selected for yourself? So having that, and pre-vetting that is going to really help you out a ton. So again, I encourage you to drive the neighborhood during commute times, during your recreation time, to see if the city of Hurst is actually going to be for you. With that being said, let's go over to JaimeResendiz.exprealty.com to search for homes in Hurst. So let me get myself out of the way for a quick second. And let's begin the home search. So we're going over to Hurst, Texas right now. There's 136 properties available for sale at $468,000 average price. Now this is going to include commercial. This is going to include condos. This is going to include all types of property. So we're going to exclude that because we're only looking at single family for the time being. And we're going to hit search. So again, that average was 468, but now we have 83 properties that are for sale right now in the city of Hurst. Now, for those of you that are new to the area, Hurst is part of what's called HEB, Hurst, Euless, Bedford. So you have Hurst right here, you have Euless over here, and you have Bedford right here. These are often seen pretty synonymously, where they actually share the same, most of these share the same ISD. Well, it's called HEB, ISD, and also they share the same stadium. There's a lot of similar characteristics here. And if we scroll back, a lot of our Hurst residents, a lot of the folks that we place in Hurst are commuting down to Fort Worth because it's a straight shot down through 121. And if we're looking at it on the map again, you're seeing that it is fairly central to where you can get to Dallas fairly quickly through 183, depending on the time of day. Because sometimes 183, aka during peak rush hour, it becomes a parking lot. Let's be real. There's too many times where I've been caught on 183 and it just becomes a nightmare. However, let's not talk about that. Let's talk about Hurst and see what we're talking about here. So let me move this over in this department. All right, so the least expensive home available for sale right now is $220,000. Now this actually looks like a apartment that's turned into a not turned into, it's just wrongly categorized, but we'll let it go for now. Now, as you're seeing here, there's 9 homes, 12 homes less than $300,000. So if you have a pre-approval in hand for $300,000, this is about 13 homes you are going to be competing for. So if Hurst is a place that you want to be, just know that there is some competition at that price point, a high competition at that price point. You're competing with first-time home buyers, and in many cases you're competing with some cash investors that are looking to just get into the market of Hurst, because that's what's available right now. So let me back up for a quick second. I just put the filter of up to $300,000 to give you an idea of where these properties are. So these are going to be south of Hurst. They're going to be south of 183. North of 183 is where you're going to start seeing the more expensive property. So the further north that you go up, the more expensive that it's going to be in the city of Hurst, just as a general rule of thumb. So as you get closer to the Colleyvilles of the world, as you get closer to South Lake is up here, Keller's up here, as you get closer to those parts of the universe or the DFW Metroplex via Hurst, that is what you can expect. So I wanted to show you that on where the properties happen to be. But now let's go into the sweet spot where you're going to find a ton of opportunities, if not most of the opportunities. You're going to see 46 properties. You're going to see them scattered throughout. So if you have a pre-approval in hand for up to $500,000, you're going to be able to get all the way up to the north part of Hurst quite comfortably. So it's a home that I can already see that this one's already renovated. So you're going to see a home that's fully remodeled from a former investor or an investor that's trying to sell it. And you're going to see a lot of homes that have been transformed, a lot of homes that have been rehabbed and flipped at this particular price point for the city of Hurst. So they'll buy these homes at around $150,000 to $250,000, flip them and put them at the price point of about $350,000, about $450,000, give or take. That's the sweet spot in this particular market, this particular city. All right, and then we're gonna go and search for. We're gonna put 500 as our floor, and then we're gonna get out of the search for a second. We're gonna put max, apply. How many homes are available for sale in Hurst right now above $500,000? You can see that most of them are up here towards the city of Colleyville near Glade Road. So you can see some very incredible, beautiful property up here. Right around Glade Road is actually one of my favorite streets. Now that we're thinking about it, in the entire DFW Metroplex, there's some beautiful real estate right in through here, and you're going to see some of that be reflected here as we scroll down towards the 700s, 800s, $1 million price points. And here it is. You actually have some builders right here. So these are more builder properties right here. You have 1.4. The most expensive home right now is 1.5. And so it's a new development up here, right into that area. All right, so that is finding that dream home. Now here, let's check this out. Let's do something real quick because our next point is going to be about getting under contract. So we need a home, we need a property so we can actually get under contract. So what we're going to do is we're going to hit 400 and we're going to say 450. Just apply those filters. Right now, what I want to give us is a sample property so we can do some math. Let's say we're going to buy this property right now. This property that is $420,000. I'm sorry, $410,000 right here. This is a property that we're going to purchase. Now, what we're going to do, we're going to make an offer. And I'm going to show you how to make that offer. We're going to actually go through the contract itself so you can see what you're going to be faced with whenever you're being asked to sign an offer. But before we do that, I want to give you a bit of an understanding of this right here, the ongoing cost. So I'm going to show you how to calculate the monthly mortgage payment. I'm going to even show you a little bit of the down payment aspect. This, not so much, but we are going to go and look at the monthly mortgage payment, the ongoing costs that are often overlooked. So we are talking about Hurst right now. And one of the things that you need to be aware of is the property taxes. Now, this right now, $83.40 is yearly. And these taxes are actually not going to be your taxes. More often than not, the taxes that you see from a previous listings are not going to be yours. They are going to be what's presently being charged to the present homeowner. Now for you, that's going to be different. So, and I'm going to show you how to calculate these property taxes because here in Texas, we have the 7th highest property tax rate in the country, which means that that's high. I'm going to show you how to find that right now. All right. Okay, so let's say we're going to buy this house. Again, go through this example. We're going to say it's 410. Let's offer $410,000. Let's give them that offer right now. So let's say we're going to buy this house for $410,000. Now this monthly is not going to move until we hit update, or at least it shouldn't move until we hit update. So the home that we're trying to buy right now is $410,000. Let's say that we're going to put 20% down. Can you do less than 20%? 100% for sure. You could put as little as 3% down if you're getting a conventional loan, 3.5% down if you're getting an FHA loan. But we're just going to put 20% down just for clean numbers. Now, when I say that, the reason I go through and say that it's going to be a clean offer is because if you do less than 20% down, you're paying what's called mortgage insurance. And this mortgage insurance is going to stay, if you're doing an FHA loan, if you don't put at least 10% down in an FHA loan, it's going to be there for the life of the loan. If you do a conventional loan, you could put less than, you can for sure put less than 20% down. And once you get to at least 20% owner equity in that home, meaning that you own at least 20% of your home in about year 10, year 11, then that mortgage insurance falls away. So again, what I'm trying to do here is just to keep it clean, just keep it super clear to understand. That's why we're going 20% down. Can I go with less? Oh, for sure you can. But then we're going to talk about PMI, and that's something that I have videos on this that really go into depth. But right now I'm just trying to show you the quick and dirty version of it, so you have a really a grasp of what the monthly mortgage payment would be. Interest rates. Interest rates, the easiest thing that you can do is just type in what is the interest rate right now, and then go to bank rate. And right now, at the time of this recording, the average is about 6.94%. Now, you could probably get a lower interest rate. In fact, you probably can't. You most sure can get a lower interest rate. It's just going to require better. It's going to require better credit. Now, at the same time, because this is an average, keep in mind, you could also get rates that are higher than this, and largely because of the debt to income and also credit that you might be carrying. So what we're going to do is we're going to say we're going to get a loan for 6.95%. So we're not going to talk about buying down interest. We're not going to talk about any of that. We're just going to put this on as our interest rate. If you get a better interest rate, God bless you, fantastic. You are in a phenomenal shape. If you get worse than that, then it is what it is. All right, so what we're going to do is we're going to expand this. I'm going to show you the more comprehensive way to calculate your monthly mortgage payment, because I don't want you to just see what is budgeted here. So if you go straight to the mortgage calculator and then type in the home price and put in your numbers, and you're thinking, oh, $2,600 is not that bad. You're right, it's not that bad, but here's the problem. a large part of this has not been factored in the form of property taxes. $270 does not exist for this property. $270 a month in property taxes is not going to happen. I'll say it again. It is not going to happen. So we need to calculate our property taxes. What is that actually going to be? So what we're going to do now is we're going to go and find what the property tax rate is right now. So all you have to do is go to Google and type in Hurst, Texas property tax rate. And then we're going to go directly to the source. So we're going to look for the city of Hurst, and we see it right here, and see if they have the breakdown. All right, so what are property taxes? Oh, no. What is my total tax rate? No, the city is only one of several taxing authorities with overlapping jurisdiction for the city of Hurst residents. Okay, so this is a really good, important question that gets asked and answered here. Let me move myself. This gets asked and answered in such a beautiful way. So they're asking, hey, what's my total tax rate? Is it the city's? If you look at this, it's not 0.59%. That is not a property tax rate. Let me rephrase that. That's not the entire property tax rate. So here, what this is saying is, hey, you owe property taxes for sure, and the city tax rate is a part of everything, but it's not everything. So there's up to 5 numbers that you need to find in the Dallas-Fort Worth Metroplex so you can account for all the property taxes. So the first one's going to be the city tax rate. Well, you see this right here. It's 0.59%. That's city tax rate. That's 1. 2, it's going to be the county tax rate. Here in Hurst, you're talking about the county of Tarrant County. You're going to need to add that in. The ISD tax rate, so the school district. So Hurst is going to have HEB, and also most likely it's going to be part of Colleyville and Grapevine ISD. So depending on where your home happens to be. So those, again, the ISD is going to be another number that you factor in. And in most cities, you're going to also need to factor in the health network and the higher education tax. So there's up to 5 numbers that we need to find. So we're going to go over to the Tarrant Appraisal District right now. We tried finding the page and it came up empty. Go back to tab. All right. So it looks like they moved it. So we're going to put Tarrant County right here. Here we go. All right. So what county? We're in Tarrant County. And if you have questions, again, you might be moving in from another town, another city. That's okay. Feel free to reach out, or you can just do exactly what I'm saying here, what I'm showing here. County, the listing itself is going to tell you. So it's going to be Tarrant County. City, well, we are in the city of Hurst. That's the home that we're trying to buy in. So city of Hurst. School district, you're going to go and see the listing itself and see what school district do we have. Where is the ISD? ISD. Here we go. HEB district, Hurst, Euless, Bedford. So this particular home is in HEB. Now there might be homes, actually there are homes that are part of Grapevine Colleyville ISD. So just be mindful of that if you're searching for a home in Hurst. But for this particular home that we're simulating a purchase in, we're going to go with Hurst. So we're going to go to HEB Bedford, HEB ISD. Now, the water district, for the most part, you're not going to worry about that. So even if you do, it's going to be like 0.01. It's not going to be that much anyway. So don't worry about the water district. Hospital network, you're talking about Tarrant County. So it's going to be JPS, so John Peter Smith Health Network. And for JUCO, it's going to be TCC, Tarrant Community College, right here. So again, these are the 3 numbers I was talking about: city, county, ISD. These 3 numbers are going to exist just about every city in the Dallas-Fort Worth Metroplex. The other 2 numbers that are going to exist in many of the cities in the DFW Metroplex is going to be the hospital network and the higher education. So what we're going to do is we're going to say it's a $100,000 property just so we can get the percentages. And if we do the calculation, our property tax rate in the city of Hurst is going to be 2.04%. And you see the breakdown here. Now you see the city of Hurst right here. It has 53.13. Well, if you go back, well, I X'd out of that screen. If you saw earlier where it said, hey, is the city tax rate the only tax rate? And it said no, it had this number right here. So you know you're on the right path. I know I went through a big roundabout way to get this, but this is realistically the only way to get here. So I hope there's a like in that in there somewhere. So let me know if that was helpful, and if it was, hit that like. It's gonna really help broadcast this video to everybody that needs to see it. All right, so let's continue. 2.04%, that's the property tax rate in the city of Hurst for this particular home that we're buying. So what does that mean? This means that we're going to come back here and we're going to do a conservative calculation of what the property tax rate actually is. So we're going to take this number right here and we're going to go back here now that we're done with that, and we're going to go times 0.02404%, and that means it's 8364. Now this is a conservative amount. This is a conservative amount of property tax that you can expect to pay. So you see that this is radically different than the 270 that's being advertised right now. So what we need to do is we need to divide this by 12, and you're going to see the exact month-to-month comparison. So this is actually 697. So this number needs to be 697. Now here again, this is a conservative number. This is based off of the market value, the value of the home that you purchased. This is not the assessed value. The assessed value is what the county appraisal district is going to use to charge you property taxes on. So with the assessed value, the benefit there is that more often than not, it's less than the market value. Why is that the case? Well, you can contest the assessed value. When you contest your property taxes, you can apply what's called a homestead exemption in the state of Texas. And in the state of Texas, you allow that market the value of the home, so the assessed value, to go lower, so you're paying less in property taxes as a break for you to be as a break on property taxes altogether. So here, this actually an inflated number. This number is a little bit higher, more conservative, but I want to give you a conservative number so you don't walk in with a ton of surprises thinking, oh man, I thought it was 297 and that's what I budgeted. Well, if you had budgeted I think it was like 270 here, that's about $420 of a difference. That's a huge difference. So that's why we do go through this breakdown. Now, homeowner's insurance for a property of this value, roughly you're going to be paying about $180. That's a good number to go with. If you get a lower quote, awesome, great, congratulations. If you get a higher quote, well, unfortunately, that is what it is. But right now, home insurance costs are just skyrocketing. So just be very mindful of that. PMI per month. So since we put at least 20% down in the purchase of the home, PMI is not a thing for us. Now, if this home happens to be in an HOA, we would be adding that in, which I don't believe it is. HOA, none. Okay. So we're not going to factor that in. Now, this calculation that it initially gave us, we're going to hit update real quick. And it's $3,048. Now, realistically, it's probably going to be about $3,000 on the nose. Why? Well, because the property taxes, they're a little bit higher. I'm quoting it a little bit higher on purpose, so you don't get blindsided when you are actually purchasing a home. So that's how you calculate the monthly mortgage payment. That's how you actually see what you're actually going to be paying for a home in Hurst, right? All right, so that is you finding the home. That is you having an understanding what you're actually going to be paying. So now what we're going to do is we're going to write an offer. You're going to see what the contract is actually going to look like. So if you're working with the real estate agent, which again, our contact information is down below, they're going to send you this for execution along with some additional documentation in order for them to put in a contract on your behalf. So let's begin. I'm going to show you the entire contract that is most likely going to be used. So you have here the party. So essentially, who is party to the transaction? Buyer and seller, pretty self-explanatory. Property. We need to denote what property that you're actually going to buy. You don't want to buy the wrong one. Exclusions. The simple rule of thumb here is when you did your property tour, everything that you saw affixed, meaning attached to the wall, to the floor, to the whatever, everything that's attached to the property is staying unless they are called out here. So the best example I'd like to give is if you see a chandelier there and you absolutely love that chandelier, the expectation is that it's going to stay unless there's an exclusion here. So in the exclusion, if it says excluding the chandelier, then you're not going to get that chandelier, or that's a negotiating item. And the reason that it has to be listed here is because it is attached to the ceiling in this particular case. It's attached to the property. So anything that's attached to the property and that is not going to stay, it needs to be called out here. If it's not called out here, then you have a problem. Then for you as a buyer, you expect it to be there, and the seller did not exclude it. So if the seller walks away or moves away with that chandelier, you have grounds to get it back. So just be mindful of that. Now, sales price, this is where you're sharing how much you're willing to offer for the property and how you plan to finance yourself. So here you're saying that there's a portion of the money that's going to be coming in cash, or a portion of the price that you're going to be putting in cash, and then the rest that you're going to finance. This says a lot about the type of offer that you're bringing to the table. Now, with the leases perspective, it's not going to come up as much, but if you are looking to buy a property that is tenant occupied, essentially there's somebody else that's occupying it there, then you do need to highlight, hey, it's a residential lease that needs to be shared with you, and that is coming with the property because there's a tenant in there. Now, again, it's not going to be as common. Most likely you're going to be buying a home that doesn't have a resident in there. And something that's becoming more and more common is fixture leases, such as solar panels. So just be mindful of that. Now, earnest money and termination options. So there's two key terms that you need to understand. Earnest money. Earnest money is essentially a good faith deposit that you're going to buy the property. And oftentimes it's about 1% of the purchase of the home, or the price of the home. It's not mandatory, it's not necessary, it's not a rule, it's not a law that it needs to be there, but it's customary to see 1% in earnest money. So if this home, we're buying it for $410,000, we're putting about $4,100 in earnest. And what does that mean? That means that as soon as we get under contract, we have 3 days to submit this earnest money into the title company to fulfill part of the contract. Once we go through and purchase the home at the end of the rainbow, which is going to be in about 25 days, then that earnest money gets credited towards closing. Now, assuming that we don't go through, assuming that we get out of the contract through legal means, through essentially clauses here in the contract in a compliant way, if we get out of the contract in the future and we end up not purchasing the property, that earnest money, again, think of it as a deposit, comes back to you, right? So it's important that, again, you get out of the contract in a compliant way. If you break the contract, then bye-bye earnest money. It's super important. All right, so now option fee, that's a little bit different. That is a fee. That is, you're paying something for something to happen. So here, what's called option money, you're paying option money for a certain amount of days of option. So the option to purchase a home. So typically what happens here is you'll put $100 to $200 for 5 to 10 days to do a home inspection. So here you would be, let's just say it's very common to see $200 for 7 days of option, where within those 7 days you have any and all rights to get out of the contract, no questions asked. So here you would put $200 for those 7 days. Now within those 7 days, you can put as many inspectors there as you want. You could do nothing if you want. And you have those 7 days. You're paying $200 for those 7 days to do whatever the heck you want in the form of staying in that contract or doing your due diligence and then getting out of the contract if you so chose. Now, if you get out of that contract, then the $200 goes, you're not getting that back. That was a fee. That was an expense that you incurred. Now, if you stay in that contract and you go through to purchase the property, that is going to get used in the, it's going to get applied to your closing at the end. So essentially that $200 goes towards the purchase of the home. Title policy. Title policy is essentially a protection for you. It's a protection for you as a home buyer. So with a title policy, let's just say somebody, a distant cousin comes out of the woodwork and says, hey, that property that you bought in May of 2025, that property was actually mine. It should not have been sold. Whoever sold it to you is a liar, con artist, blah, blah, blah. Well, sorry, cousin, of the past homeowner, I have a title policy, take it up with the title, a company that is indemnifying me from those issues, right? So there, it's that's what you're paying for with the title policy. You're buying a insurance policy, an assurance that whatever you're buying, you're actually buying. And if something were to go wrong there, then the title policy is responsible to indemnify you and protect you from that. Now, depending on how you're writing the offer, depending on the real estate market, depending on your, love with the property or not, or how much you want this property, the title policy, who pays for it, is up for negotiation. So in normal markets, just as a rule of thumb, in normal markets, it's pretty common for the seller to go ahead and pay it if you're putting in a competitive offer. Survey is essentially letting you know what you purchased. So it's going to be a piece of paper that gives you a breakdown of the property and the land itself, along with any easements that are going through the property. So basically, it's a map of your home. It will share with you, hey, where the boundary lines are, so you can so you know whenever you're building that fence, where to put that fence. And surveys, if typically they're handed over by the seller if they happen to have it. But if there happens to not be a survey and a surveyor needs to go out there, then you're looking at about a $600 piece of paper. So if you just purchased a home and have this piece of paper in hand, make sure that you don't lose it, because it's a $600 piece of paper that you don't want to have to pay for. All right, so HOA. So this home is not member of an HOA, but if it was, then you would call it out there, and there would be an addendum attached to your offer that you would need to fill out. Seller's disclosure. It is by law, the Texas Property Code, that the homeowner has to provide you a seller's disclosure, which is essentially the homeowner sharing with you anything and everything that they know about the property, the good and the bad. So they are responsible for that. That's what a seller's disclosure is, and you as a buyer have the right to receive that. So this is what you're saying, hey, I have received it or I have not, and you have 2 days, 1 day, 3 days for you to send it to me. Buyer accepts the property as is or not as is. So here, it's rare that you're going to go into select number 2, because you're allowing for the option period to actually happen, so you can then receive the full breakdown of what the condition of the home is, and then you can start negotiating from there, additionally, if needed. Residential service contracts. So this is what's called a home warranty. You can ask for a credit from the seller in this particular field. So it's not uncommon to ask for $500 or so for that credit. Again, it just depends on the strength of your offer. So everything here is negotiable. This is not advice on what you should be putting here, but I'm sharing with you what is commonly seen in contracts like this. Now, when it comes to closing, on average, we're closing contracts between about 21 to 25 days. You can close a contract in 21 days comfortably, and 25 days it's super comfortable. There's not you're going to be able to close on time. It's not a big deal to close within those. Now, if you start trying to close on in 18 days, 14 days, then that becomes a little bit more rushed, and it's going to become a little bit harder. Now, can you do it? For sure. However, it's going to be way challenging. So just give yourself plenty of time. Again, it's normal to see about 25 days. Now, possession is essentially if you're going to get into the home or get access to the home at the time of closing, or if you're giving what's called a seller leaseback, where you're allowing the seller to stay there a few more days as they move out, then this is where you're talking about when you're taking possession. Now, the rest of the information is pretty straightforward. It's something that just provides contact information, the addendums that need to be attached for the offer. That is elements of making an offer. Now, I like to break down the process into 4 weeks. Excuse me. You have week 1 is going to be your week of inspections. Here's your due diligence. Week 2 is your approval week. You're working very hard to get everything into your lender, into your title company to get approved. Week 3 of the transaction, once you're under contract, the conditions week. So let's unpack these real quick. So week one, I don't know what Siri was talking about. Week 1, you're doing inspections on the property. You're doing due diligence. And as you're doing your due diligence, if you find something that's wrong with the property or something that was not expected, then you have the opportunity to renegotiate, re-underwrite the deal. Approval week. So this is where you're working very, very hard. Again, this is week number 2. You're working very, very hard with the lender and the title company. So anytime they ask for documents, please be very mindful of that and submit everything that you can. The appraisal at this point is going to be ordered. So at this point, that's when the lender is going to request an appraisal of the property. So essentially, they are going to do their own opinion of value, their own valuation of the property to make sure that whatever is getting purchased actually is worth the amount that's being offered. Now, the appraisal is something that you are going to pay. It's going to be about $500 or $600. Sorry, I'm struggling right now. Let's try the different drink. Now, week 3, while you're under contract, you're doing some cleanup duty. You're cleaning up conditions. So once the lender has enough of your file in place, has enough of your documentation in place, has enough of that they need, they're going to send it over to the their team to make sure that everything is good to go, to make sure that they oh man, I'm struggling. Sorry. To make sure that all the conditions are met, all the requirements of the loan is met. So essentially, they're going to send it into their process. Their processors are going to take care of it. And if there's something that is missing, if there's something that is wrong or something that needs clarification, that's called a condition. So you have to clean up those conditions in order for you to get approved for the loan. Appraisal at that point is most likely received around week 3. You're going to get the appraisal back, where the lender is going to say, hey, this home met appraisal, this home appraised, or this home didn't appraise. So let's talk about what happens if it doesn't appraise, because that's when you can get into some issues. So again, in Hurst, it's enough of a mature market in Hurst that for the most part, you can have a realistic expectation of what a home can actually sell for. So there's going to be plenty of comps. There's going to be plenty of ways for you to have a reasonable amount of certainty that whatever offer that you're putting on there is going to meet appraisal, assuming that you know how to do comps assuming that your real estate agent knows how to do comps. So that's not going to be a huge deal there. But let's talk about an appraisal. So going back to this example of this Hurst property that we're trying to buy. Let's say we put an offer of $410,000. And let's say that the appraisal comes back at $350,000, saying that, hey, the appraisal came back and said that this property that you're under contract for $410 is actually only worth $350. So what happens to that difference? There's a $60,000 shortfall here. So that $60,000 needs to be rectified in some way. Well, there's 4 ways that this can go down. So again, you're under contract for $410, and the appraisal says that property is only worth $350. You as a buyer can come up with the difference. You can come up with that $60,000 difference to where you would make up that difference. You're putting additional money essentially down in this particular case to purchase that property, and the bank is going to loan the rest of it, right? So up to the value of the home, right? So you would be paying that additional $60,000 of a difference. That's option 1. Option 2 is that the seller decides to play ball here and reduce the value of the home, or reduce what they're willing to accept for it, and only accept $350, what the appraised value is. So that's option 2. Either you go up, option 2 is the seller comes down. So either you go up as option 1, covering the delta, or the seller comes down to eliminate the delta. That's option 2. Option 3 is you meet somewhere in the middle. Right, so the seller is willing to concede a little bit on the price, and you're willing to come out of pocket a little bit more to get somewhere towards the middle. It's going to depend. Again, this is where negotiation comes into play. This is where you have a qualified real estate agent that knows, how to appraise, how to do CMAs, how to get you in the appropriate position to where this never even becomes an issue. But in the event that it does, they need to know how to mitigate this. Right, and then option 3 is you get out of that contract altogether. So there are clauses in here that allow you to do that. So we're not going to get into those clauses right now because that requires me pulling up another addendum. As you can hear, my voice is struggling. So option 3 is you get out of the contract altogether because you could not close the deal. You could not get financing. That's what happens. And then around week 3, you're also securing your homeowner's insurance at this point. So what I encourage you to do is go ahead and try to get that bundle package. So if you have State Farm, if you have Allstate, if you have Progressive, whatever insurance, auto policy that you have, try to get the home insurance as well. They'll typically give you a better deal, but you can also shop around through insurance brokers, or you yourself shop around and try to find that best deal. But you do need home insurance prior to actually closing, because you're gonna, well, one, the bank is not gonna allow you to fund that loan until you have that, and also you're gonna be prepaying for a certain amount of months of homeowners insurance. That's what's called prepaid. So that goes back to the transaction cost that we were talking about earlier. That's what's called prepaids as closing costs. Week 4 is you focusing on moving into that home. So you scheduling your closing and activating the utilities, you receiving what's called a seller's disclosure, which is the number that you're going to need to come to the table with, and the entire, where all the fees are going, where all the amounts are, and everything that is very, very clear what your mortgage payment is going to be. Everything is presented to you at least 3 business days before closing. If you do not get presented that closing disclosure within at least 3 days, or at least having 3 days to review it, then that could and will delay the closing. So make sure that you're with your lender and give them plenty of time to give you that disclosure. Final walkthrough is going to be either the day before or the morning of closing, to make sure that what you're buying at the end of the day is exactly the way that you expected it to be. Then at the end of the day, when you're at closing, then you're going to wire the funds and bring the cashier's check along with your ID to a title company for you to close. And when it comes to closing, once all the funds are in, meaning once everybody is signed and the documents have been sent over to the lender to verify that all of the I's are dotted and the T's are crossed, then what's going to happen is the loan funds. That means that the authorization for the loan to fund and the seller receives their funds as well. Then you're officially closed and you're an official homeowner. I know we went through a long journey here, but I want you to be fully prepared, fully aware of what happens, not just to get to closing, because even beyond that, what's going to be important is after closing. Within your first week, I want to share with you what you can expect, or what you should be expecting, what you need to be doing within your first 30 days, what you should be doing with your home within your year, and then also some pro tips along the way so you don't get scammed and everything in between. I highly encourage you to go to dfwhomebuyerclass.com to get all of the resources that we have available to you. This is the exact resources that our internal sales team uses with all of our transactions that we have going on, so that under no circumstances do our buyers, our clients, have to guess where they are in the transaction. We have everything laid out, very time bound, so our clients are always informed, and I want you to have the exact same thing, even if you're not working with us, although I wish you were. Anyway, our contact information is down below. Now you know how to buy a home in Hurst. If you want to check out any other content in the channel, check out the other videos. They are super helpful, if I do say so myself. Outside of that, see you on the next one.